they've really been doing just the opposite. They had 14% in cash at the beginning of this bull market and 4%, only 4% at the peak. They were bearish when they should have been bullish and bullish when they should have been bearish.
What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. That right there was John Bogle, Captain Jack, who is credited for creating the very first index fund. Now that interview is linked in the description below if you want to watch that full interview, but I just clipped out a very important part where he was talking about basically just timing the market incorrectly. Before we get started today, I wanted to run something by all my loyal followers and potentially new subscribers to see if this is something that you would be interested in. What I am considering doing is changing up the format of these videos just a tad bit by adding in other indexes and various other elements. I wrote some notes down here to run it by you guys, and if you want me to do something like this, leave in the comment section below, use the word quote market brief. Let's just say that'd be easy. So if you want to see this, you want to comment in the section below, market brief. So in this market brief video, the daily video, Monday through Friday, what I would be covering is the S&P 500, the volatility index if it's applicable, the NASDAQ 100, the Dow Jones, the US dollar, probably looking at the DXY, the 10-year bond, gold, and silver, all in one video with timestamps, chapters, or whatever you want to call them to make it nicely organized. So if you want to just see gold portion, you can just click the gold timestamp. If you want to see silver, you can just click that, or you can watch it all the way through. So if that is something that you'd want to see more often or frequently versus separate videos, leave in the comment section below market brief. And if you're not already subscribed to the channel, please subscribe to the channel and like the video as well. That would be my only ask to you if I were to be doing these briefs. Enough about that. Let's just go ahead and hop into today's episode where we're on the daily time frame for the S&P 500. This megaphone pattern right now is that's the only thing that we're really keeping an eye on at this particular time because there's a lot of resistance up at that trend line. And then we have the 3,600, nice round number right there, also as an area of resistance. So let me zoom in on this pattern here. And really what we got going on right now is a very interesting day. We had a little bit of a gap up and push higher throughout the day, really just kind of went sideways. And I'm gonna actually bring you to a 10-minute or a 15-minute time frame just to show you how aggressive and volatile this market can get in a snap of the finger. So we gapped up, moved higher, and then we closed more into the middle of this other bullish day. This candlestick pattern right here is pretty bearish in my personal opinion, with a gap up and then a close midway through of this bullish type candle. So we're going to have to watch this and monitor it closely because this could very well be the potential start of a minor pullback or even more aggressive of a pullback. Now that does not necessarily mean that I would short into this because this market still has a lot of upward momentum. Even regarding this high resistance trend line, I still find this to be a buy the dip, sell the rip type of market. So don't get all crazy and worried thinking this market is just going to collapse like crazy. There's still areas of support that can really hold this market up. The main level that I want to keep an eye on, I was saying 3,200, but 3,400 looks like that new strong floor, that level right here. Clearly the market was trying to get up to those all-time highs for the first time. It went sideways, and then when we broke above it, we really started seeing it move. So a back test of this 3,400 would seem likely. So what can potentially happen? Well, we might see the market potentially pull back to that level and then bounce more from that point. Very possible. Or we might see just a continuation above the trend line. On last week's video, I discussed the possibility of some type of inverted hammer candle popping up like this into this trend line, and that could signal somewhat of a warning sign as well. Now, there's plenty of warning signs and indicators and divergences taking place in this market to make me say, hey, right now is not the time to buy into long positions. I personally am patiently waiting to see some sort of a pullback into an area of support to make more aggressive moves in the market. That 3,400 level looks like a strong area of support, so we're gonna have to watch this level as our more major area of support on the daily time frame. Then below that we have 3,200, and also we have the 50 period moving average too as well, so got to keep an eye on that. Now I want to bring you over to the SPY chart on the 10-minute time frame, and I'm going to do that on my Webull desktop software. And the reason why I want to show you that is just to give you a good idea as how fast this market can turn on you. All right, so we're here on my Webull desktop software. This is the SPY that we're looking at. We're on the 10-minute time frame, and I'm actually going to the 1-minute time frame to even just to give you a good sense as to how volatility can really pick up. This is important to note, so pay close attention. This vertical line going down the screen, this green line, represents where the day started today. Okay, and this is the 10-minute time frame, so every candle thereafter is 10 minutes. I'm gonna go ahead and move my moving averages off just to clear up the screen a little bit. Okay, so we're here, the day's going, boom, 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 and in the very last 10 minutes, look at the size of this candle. This was in 10 minutes. Look at this, the high of 351.30 all the way down to 349.06. Now, if you look at the high and the low, notice how the entire day, an entire trading day, didn't even come close, well, other than right here, come close to the bottom of that. So in simply 10 minutes, it engulfed from the high of the market to the low of the market. This right here is a signal. It's a warning shot. This. You need to be careful when you see these type of things, especially going into market closes. This is a very, very aggressive sell-off, and you need to be prepared if there is more downwards continuation. This is the type of stuff that I've been mentioning, how volatility can really pick up. And we'll go into the VIX later to see if we're starting to see an increase in that as well. But now watch, I'm gonna go into a smaller time frame just to really give you a good sense, because if 10 minutes doesn't scare you, maybe 1 minute will. Okay, so here is the 1-minute time frame. Obviously a lot smaller candles because of this whole, there's more candles there. So the day started here, but really what I wanna show you is zooming in to this candle here. So each one of these candles, like I said, is 1 minute. This right here, this candle right here is 1 minute. So if you're not fast or if you don't have stop losses in place to manage your risk, that right there can happen to you. This is why I say don't just buy the dip without a stop loss or a dollar cost average down. This right here can really, really affect in a portfolio, and it happens so quick. We know that this stuff is going to happen when we get super overextended moves. And to be quite honest, you could have kind of saw this coming when we saw this ramp up, bounce from this point, and then we had this inverted hammer on the 1-minute candle. And then as soon as that took place, boom, we came down to the VWAP, little bounce, but boom, once again. Now that doesn't mean this volatility is going to continue to the downside. We could very well see an extension, kind of a rubber band extension move, and maybe even make new market highs. That's very possible. But let's go ahead and hop back over to the SPX chart on TradingView. All right, so we're back here looking at the SPX on the daily time frame. And yeah, that was a very volatile minute, and then also 10-minute candle. And this right here on the daily, you're like, that's nothing. It doesn't really look like much. Well, that's what I want to make sure that everyone kind of sees and understands, because if we do have that type of aggressive volatility pickup on the daily time frame or even the weekly time frame like we saw in February, it can apply a lot of downwards pressure on your long positions. So you got to be very, very aware of what can happen. Now, enough of scaring you. I just wanted to really point out that yes, the market can get aggressive, and it could get aggressive quick. It did so on this blow off top we've been discussing. Now, to be a blow off top, it needs to actually be confirmed later down the road that it's a blow off top. So yeah, got to keep that one in mind too. This very well might just be just a subtle pullback to make new highs, but the volatility is what you need to focus on. If that doesn't say, hey, I really should have a stop loss, then I don't know what's going to convince you otherwise. Because dollar cost averaging moves like that is just a death wish to any trading portfolio. All right, let's zoom back out here. All right, so now we have that 3,400 marked as support on the daily time frame. That would represent to me a good area to buy the dip. Then we have 3,200 and this 50-period moving average. I feel like a snapback to the 50-period moving average would make sense. And on the other previous video, I started mentioning how overextended the price was from the 200-period moving average. And I said that was a historic time. And on a chart that I saw, it actually was. That was a Bloomberg chart. But then I started to look back because somebody said, no, it's not historic. It's happened before, so I went back and checked. I mean, as good as I could. I mean, it takes a long time to go on the daily side and measure all of this, but I did find something very interesting. Not only was that person right, but what I found interesting was the times in history when this occurred. So we had 14% right now from basically the 200-period moving average on the daily time frame. That's important on the daily time frame. We're measuring that. It's going to be different on the weekly. It's going to be different on the monthly. It's going to be different on all that. We're looking at the daily. 3,084 is where basically the 200-period moving average is, and then our current stock price is at 3,500, and the percentage above that, basically the overextension is almost 14%. So we're 14% overextended. And now I looked at other areas. I was like, oh, this is a pretty strong area right there. Nope, it wasn't. It was only 11.5. But then I was like, I kept on going back. I saw this area right here. Let me measure that out. Very similar, just around the same, 14% right there. So that was, nope, not a really record. And obviously I'm not touching it perfectly, but it was around the same right there. So where did I find it? Well, guess where I found it. I'm gonna zoom in so we are here in 1987, and this was really the only time that I can see that was significantly higher than the previous. Now by significantly, I don't mean the dollar amount necessarily. The dollar amount is still, I would say, one of the highest, if not the highest. It's over 400 handles above, but this is the percentage base. So we're looking at right here, 17, almost 8, basically 18% overextended from the 200 period moving average. And this was also for early 1987 in March, all the way till August. Oh, weird. That's actually really weird. So I did not actually plan that. That's just, what I just realized here was the dates are actually kind of scary. So in 1987, we saw this extension to 18%, and we saw that pullback into April, and then it started climbing up, making market highs, got overextended in mid-August, and then we started seeing the pull down take place, and then we saw some recovery, some volatility, probably created some happiness there for a lot of investors, and then that right there is the 1987 stock market crash. Sorry, I'm shaken up by this a little bit just because of the dates. It's very weird. It probably honestly means nothing at all, but it is interesting to point out that this was 1987. These were more overextended levels. Now, I saw some stuff in the early 90s also as well, around the 15, 16%. Now, I quickly did this, so I mean, it might not be exactly precise. It would be very similar, but the dates are very, very interesting. So I saw in the early 90s, there was also some pretty large overextensions. Most of the stuff that I've been seeing that were the overextended moves, the high ones were around 12 to 14%, kind of where we are right now. But this one really stood out in 1987, and then we had it also in the early 80s, and that was also known as the 1982 bear market. That was when Paul Volcker was our Fed chairman, and I think that around that time was when Reagan took office and replaced, I think it was Jimmy Carter. So don't quote me on all of that, but I did want to point out that the last time that these overextended moves happen, it doesn't always end in the greatest of things. So weird how the dates match up right now nonetheless, but let's go ahead and back over to the more current time frame. All right, so we're back here on the daily. Just to kind of recap things, we had, yes, the overextension of 13%, now 14%. We're talking about an area of support that is still, in my opinion, a buy the dip, sell the rip type of market. 3,400 looks like a nice level, and then a 50 period as well. I ultimately think that we could see a bigger pullback from around the 3,200 to around the 200 period moving average. That'd be around 3,000. So that zone right there, let's call it. Let's just go from 3,000 to, no, I'm going to bring it just a little bit above. I would say this zone right here would make sense. That would probably be more of a target where I can see the price pull back into before we start heading higher. Now, if we start seeing breaks below that, I mean, yeah, I'd be a little bit scared and I would probably be getting stopped off on the long positions. But I don't see with what's going on currently in the economy, with what the Federal Reserve is doing, to just see a complete just smash down to retest the March lows. Is it possible? Absolutely, but I'm not here to predict that right now at this particular point in time. What we need to do is we need to play it day by day and kind of just have ideas in our mind as to what could happen in the more nearer future versus this long-term time frame right now. So what other indicators do we got going on? We have the McClellan oscillator right here, still has a negative breadth, so under zero, continuing while the market obviously has been moving higher, got a negative divergence there. We have the VAPI, the volume accumulation percentage indicator. We had a little bit of an uptick there in it, but it's still, I mean, a negative divergence, right? We have a high here to a lower high. Where we go right here to the market, we have a low high to a higher high, so negative divergence there. When I bring in the relative strength index, we kind of saw a little bit of a downtick. We're at 76.24. We're still in overbought territory. What I wouldn't be honestly surprised to have happen is a pullback to this 3,400 range and make new highs. But then on the RSI, I wouldn't be shocked to see this pull back into here and then bounce back up like that, creating like another negative divergence where the price is going higher, so the price action moves higher, but yet the RSI doesn't, so it would create another negative divergence, meaning that we might be seeing a stronger pullback to that target area. So it's something that, you know, keep an eye on as well, but that 3,400 looks like a very solid strength. Obviously, we got rejected there previously, but this would make a good risk versus reward trade if we get that pullback to 3,400. And I will tell you this, I'm not going to miss that trade this time. I missed the trade where I was like, if we get a pullback to 3,000, it would make an excellent risk versus reward trade, and that candle right there tiptoed on it, and then it moved up. So if you've been watching this channel for a while, you remember my frustrations missing that, and I'm still talking about it to this day. The next big trade that I was talking about was the 3,200, where if we saw that pull back to that 3,200 range, I would be getting in there, and this day right there, it pulled back to it almost perfectly, and I missed that trade again. I suck. But I promise you this, I'm not going to miss 3,400 if we get the pullback to that with a nice risk versus reward trade. Chances are, though, because I do actually get into the position, I'm going to get stopped out and the market's going to move higher. It's just what happens. Let's go hop over to the VIX chart just to check out the volatility. All right, so this is the VIX, the VIX, the Volatility S&P 500 Index. And we've been kind of monitoring this falling wedge right here. It broke out recently and it's kind of been trailing sideways to following this trend line down. And up until the last 10 minutes of today's trading day, I was kind of under the impression that this will probably be filling the gap. Now, I'm at a little bit of a loss for words because it does seem like it wants to continue to head higher and volatility is going to be increasing. But that kind of leaves me, a little concerned because it's going to be leaving this gap right here. And I feel like it still eventually come back to fill it. So what would that really mean? Well, that's why I was kind of painting out the scenario on the daily time frame where we pull back to 3,400, meaning that we get more increased volatility. That might bring this VIX up to 40 or maybe even a little bit higher, or maybe not, but maybe that would increase the volatility to going down on the S&P 500 to 3,400. We might bounce from that specific point and then head to make new highs in the market, which would ultimately come to probably fill this gap. Then we'd have to remap things out, kind of consider what's going on in the market and go from there. But I can see that as a possibility. And if that does happen, I think that we'd probably see another negative divergence take place in the RSI as well, and potentially even have it in overbought territory again after a slight pullback. So something to keep an eye on and watch and monitor. But ultimately, that's more of a forecast. Can't really create any trade plans specifically around that other than playing the pullback to 3,400. Now, the VIX target that I've been talking about was anywhere between 40 to the top of this falling wedge, which is 45, let's call it. So this zone up here, I don't see why a breakout of a falling wedge can't go boom right up to there, because it did it previously. So we had a falling wedge, it broke out and pretty much reached almost to the high of that channel. So this zone, this range would make sense to me on the VIX. Let's go ahead and hop into the 30-minute time frame of the S&P 500 index and map out any supports and resistances that we see on today's trading day and see if there's any trade plans that we can create. All right, so we are here on the 30-minute time frame, and I'm going to quickly just map out a couple areas of resistance and support. Now, even after that violent 10-minute drawback that we saw, you still zoom out of the context and everything is still in bullish context. So the trend remains bullish, even though we did see some very dramatic pullback there. Now it's obviously something that we don't want to just ignore, but that's why we're mapping out support and resistance today, because if we set up trade plans around that, make sure that we're monitoring our risk and managing it to the best of our ability. The only trades that we should be taking are risk versus reward trades that have higher potential of reward than risk itself. So the first thing that I want to map out is the area of resistance. Clearly right here throughout the entire day, 35.10 seemed to be that hard area to get above. And then when we finally did break above it, more towards the end of the day, it looked like we were going to continue that breakout, but clearly it was a false breakout at 35.10. So that's an area of resistance. If we get a close above that on a 30-minute time frame, I'd expect this area to act as support and see a continuation potentially to the upside or a breakout, maybe a back test, something like that. But that would be the resistance I want to keep an eye on. Other than that, we have the purple trend line up here. It's not drawn out perfectly, but that is an area of resistance. This kind of zone is all an area of resistance as well. So we have that. As far as support goes, the support level to keep an eye on, one is the 50-period moving average. That would make sense to me. Clearly, it pulled back here throughout the partial portion of the day. A big red candle and then a big green candle following right there. So this area is a pretty strong area of support. And clearly, you can see the price action got intertwined within this same exact area. Then we have the 50-period also sloping up to that. So strong area of support there. to be watching and looking out for tomorrow. As far as other areas of support go, if we get a close below the 50, this level right here looks interesting, 34.84, but honestly, it looks like a zone. Like you can go back a little bit lower to 34.80, that would make sense. If I draw out a line right there, you can see it struggled to get above it, but when it did gap open and close above that, we did have a pullback 2 times right there. Then we had a very dramatic pullback, but it kind of, I mean, it fell within a little bit lower down to this low of 34.70 range right here to more support, and then bounce from that point. But ultimately, it did hold this zone. So 30.70 to 30.80 seems to be that strong area as well for an area of support. So I'd be keeping an eye on 34.80 tomorrow. Now, if we do continue to push lower, if the market doesn't want to buy into these dips, which would be shocking, that'd be the first time in the whole entire month of August. Wait, nope, yep, today was the last trading day of the month, so September, maybe we might not be buying the dips in September. I guess we'll find out, but 34.80 looks like a decent area for a buy the dip, and then we have 34.93, and then we have resistance at 35.10. So how would I go about trading a day like this? Well, one, it ultimately depends where the market opens up. If we get some sort of gap up tomorrow and we're above 35.17 in the overnight futures market, maybe wait for a pullback to 35.10, have a tight stop loss, and then play a bounce from there. That would be one trade. Another idea is if we open up within this channel, then you could play the support area or the 50 period. So if we open up right here in this area and we start getting a pullback in the beginning portion of the day, maybe I would buy into that specific dip and then have a tight stop loss under the 50 period on the 30-minute time frame, and then under this area of support. So if I get stopped out, it is what it is. And if we get a continuation to the downside still, then I would be looking at this as a level 2 as well to buy that dip and have a tight stop loss. If it keeps continuing to fall through that point, I probably would just wait and probably not trade much into that anyway. So a couple different ideas as far as trade plans go going into tomorrow. If you don't, like I said, already follow me on Instagram, go ahead and follow me on Instagram, because if something does pop up, I will go ahead and post it there on probably a different time frame, probably like a 15-minute or 5-minute time frame for more of a quicker type trade. That's all I have for you on today's S&P 500 technical analysis update. Be sure to leave a comment letting me know if you do want to watch that market brief that I talked about at the beginning of the video, or if I should just have them all in separate videos, or even bother with all of that. So appreciate everybody out there. See you soon.